Hey there, Dan Edwards with Keller Williams Realty in Bellevue and the East Side Real Estate team, and this is your market review for September 2018. Quite a lot to cover. I'll go as quickly as I possibly can, but I want to kind of just start by going over with what we're seeing in the market, what has transpired over the last 9 months, and where we sit and where we're headed. So I'll kind of start with the nationwide kind of statistics, and we'll start with this chart here on inventory levels. So if you take a look at the year-over-year inventory levels going all the way back to, it looks like, I believe this is 2015, 16, 17, 18. Yeah. You can see we're now starting to head towards the positive range. And this is a nationwide picture, just understand that. We'll break down some of the additional stuff. So you've seen that locally. But a lot of other markets are still constrained for inventory for a lot of different reasons, new construction being one strong point that just hasn't recovered yet. So as you look around the nation, you can see these are the areas, and right now we're rating the amount of time on the market by days on market, minimum up to 30 days. So most of the West Coast is about 30 days. And then you're seeing North Dakota, Wyoming, New Mexico that are showing between 46 and 60. And this is obviously on a microcosm, but 29 days is the average days on market nationwide. So the interesting part is with all of the changes, with all the new inventory that's been hitting our local market, a lot of people are thinking, wow, it's crashing, the market's crashing. And I want to share with you a nationwide chart that shows home sales compared to 2017. And as you'll notice in this chart here, the numbers of closed sales are pretty much echoing the previous year. It looks like in June it was a little below, but in July it was above. Again, these are nationwide numbers, but this is kind of an idea of the health of the overall market, because nowadays people are moving in and out of other market areas, and this is kind of the temperature of, is home buying still a priority in our nation? And it looks like it's still moving right along. All right. So let's break down the King County numbers for September. So the median home price, it looks like I'm going to move my picture over here. Hey. Median home price has moved up 7.96% to $610,000 in King County. Total inventory, it was up 78% over September of 2017. Pending sales down 18%, closed sales down about 30%, and right now our absorption ratio is 2.83. That's 3 months of inventory. Balanced market, according to most statistics, is about 4 to 5 months of inventory. So we've been aggressively moving up since April of last April of this year. We've been moving up in the months of inventory, which is great. It means fantastic news for the buyers out there. So let's look at, the curve. You can see right here, the very beginning of this year, we started our uptick in inventory, and that has continued throughout the year. That's kind of a obvious chart. This one's one that I think is interesting to look at, because what I did is I broke out the home sales by price range. So we've got 400 or less, 500,000 or less, basically, and then 500 to 750,000, 750 to a million, and a million plus. And you can kind of see the reduction of homes at that 500 or less, right? And then we have an increase in the 5 to 700, and an increase in the 7 to a million, an increase there. So we're seeing the reduction, obviously, of affordable housing, or homes there at the bottom. And there's a program, it's a down payment assistance program that we have available through our lender partners, that if you have questions about being able to afford a house, come to us. There's some grant money that's available. You can shoot me a text, instant message, private message me on Facebook. Be happy to share with you the details on how to utilize the affordable housing. But you can see in King County that's shrinking, right? There's less and less of it. So it might be a good time with the increase of inventory to kind of take advantage of the opportunities out there, because before there was competitive offers, you couldn't even conceive of competing if you were coming in with down payment assistance. Now we're going to see a rise of that, of utilization of that program. So I'm very excited about that. All right, so let's take a look at the East Side numbers. Oops, this might switch. Stay. Okay, good. So the median home price on the East Side, 800,000. That's up 8.11%. Total inventory is up 87%. So we almost doubled the amount of homes now on the market compared to where they were last year. Pending sales are down 21% and closed sales down about 30%. Months of inventory 2.81. So King County and the East Side mirroring each other quite a bit, but of course the average or median home price is a couple $100,000 more on the East Side. All right, so let's look at the breakouts of the area inventory, and you can see that September did show an actual increase of homes for sale over the year before. So there's Bellevue was up 20%, Kirkland 32%, Redmond 35%, and Issaquah 29%. So all of them showed gains of inventory. Notice though we're not above the inventory levels as we were in 2016. So we're seeing some more inventory come to the market. That's good. It's going to be interesting to see how the next 6 months go. All right. All right, this next one is the median home price. You can kind of take a look at how it's increased. And what I anticipate is a more normalization of appreciation over the next year. So rather than the 13% that we saw in 2017, we're probably most likely going to end up somewhere around 8 or 9% appreciation. And then that'll probably reduce the following year to somewhere between 5 to 7. So that's good, and if you look at the numbers across over history, you're going to see a longer burn before getting to that appreciation. It's going to probably stay somewhere between the 4 and the 5, depending on how the economy and interest rates and all those things kind of go. All of that stuff is a moving thing. So this next chart's pretty cool. Let's take a look at that. So this next chart is what's called the Market Action Index, and as you look across this, you can kind of go all the way back. We have data all the way back to 2007, where the before the market crash, right? And then you see this nice little boom slide down. Well, not so nice for those of us caught in it, but then you see these pockets, right? So from 2010 to 2013, or about the end of 2012, then we hit a spike in buyer activity, and now you see this spike in growth, right? Market activity, and then you see this reduction. So it'll be interesting to keep an eye on this market activity, because obviously we're back to about 2014, 2015 activity, but there's still high demand for homes, and I believe this will turn around, and it will most likely see this turnaround in April of 2019. Probably won't go up, but I'm thinking we're going to hit a new trough up here for over the next cycle, but it'll be a very interesting to keep our eyes on that. And I thought this was a cool chart to show. Love your feedback. If you have comments or questions, you're welcome to do so in the field here below. All right, so what should a buyer do with this? Actually, this chart right here reflects the effect of the interest rate change on your purchasing power. So as you look at the very bottom line there, it shows 900,000 down to 810,000, and then it shows a diagonal of your payments. Now, right now we sit at about 4.75 is what a lot of people say, but in the end they're usually a little over 5. But just for the understanding of where this goes, interest rates most likely going to be going up, you can see that your payment goes up quite a bit anytime you see an increase in interest rate. So if you want to keep your payment, which is usually what most people budget off of their monthly payment, the same, obviously the lower the interest rate, the more home you can afford. And notice it changes from a $90,000 swing in a let's see, it looks like a 1.5 point change in interest rate. So watching the interest rates is probably the most important thing for buyers that are considering buying a home, because that's going to have the most impact on your ability to purchase in the area that you want to purchase. What do the pundits say? So as you take a look at this chart, we have been talking about this interest rate increase for quite some time, and you can see we're at 3.74, 3.5, 3.8, 4, back down to 3.9, and then now we've start to hit in quarter 1, 4.3, 4.5, quarter 4. It looks like let's see, I'm moving myself out of the way. It looks like we're right now, I know people are getting loans at 5.125, and my guess is we might eke up into that 5.3 to 5.5. That is going to impact your ability to afford a home. So just keep that in mind. I think going into this fourth quarter of 2018 with an increase of inventory, sellers that want to sell and interest rates right around the low fives, and gosh, I got to say, it's a really good opportunity for buyers to take advantage of that. A big concern that most people have is that with interest rates, with the market as volatile as it is, that we have another crash looming. And I want to prepare you for the eventuality that I don't have a crystal ball. I don't know what could happen. But learning from history is those that don't study history are doomed to repeat it. So let's look at history. And this historic data of mortgage credit availability shows that in June of 2005, we were at an 800 point, and we went all the way up almost to 900 in June 2006. What that means is mortgage credit was available to just about anybody. So hence issue in the crash, and you see in June of 2008, brought it all the way down to 100, and you'll notice that we haven't broken the 200 mark, meaning that we still have to have qualified buyers in order to lend them money for a 30-year fixed. And what that does is that protects the market from a crash, because essentially we're saying that the people that are actually getting qualified for loans and buying loans have the capacity to pay for those loans for 30 years. And so you end up with more responsible home owners, ones that are making the mortgage payment. And it doesn't mean that something catastrophic can't come along, but our current environment is really supply and demand based, and not based on an artificial demand created by mortgage availability. I hope that makes sense. So essentially, sellers out there need to know that it's important to be compelling, right? Because there's a lot of competition for you out there, and it's no longer enough to just put a sign in the yard and list the home. You need to be compelling. You need to study your competition in just a few days. It's going to take some market time, and it's going to take some effort. At the end of the day, the reality is for buyers is this is an opportunity between now and whenever interest rates really start to tick up, and maybe buyers flood back into the market to choose between multiple opportunities when it comes to homes. You can pick and be a little more discerning. So take advantage of where we're at with interest rates. Take advantage of the inventory that has hit the market here in King County and the East Side. If you have additional questions, or if you'd like to challenge anything that I've said here, feel free to put your comments in the comments section. I'd love to hear what you had to say. I'd love to hear your questions. I'm Dan Edwards with the East Side Real Estate Team. Thank you for watching.